Hey YouTube, it's Dimitri, and today we're going to talk about whether or not you should get a credit card and are credit cards bad. And we're going to talk a little bit about building credit. So if you're new to this channel, I work in risk management. I run quantitative finance teams. I've built models. And when I say I build models, we build models for all kinds of things, but a lot of these are called credit scorecards. Credit scorecards is like a bank's internal FICO score. So it's like me building these models. So I know a little bit about the ins and outs of the models behind the scenes. But today we're going to talk about credit cards specifically. There's always this kind of like warning sign, like don't get credit cards. There's like the Dave Ramsey plan, which is like whatever you do, don't get credit. And then somebody messaged me, and I'll put kind of the question here on the screen. Basically, they're feeling the pressure like, okay, I should get a credit card, and all my friends are pressuring me because I'm going to build credit. And then on the other hand, credit cards are dangerous. You can get into massive amounts of debts you can't get yourself out of, and they can just be this horrible thing for you financially. So the question that everyone wants to know is, should I get a credit card? And the answer really depends on how mature you are financially. So let me break this down a little bit for you guys. Rightfully so, many people are scared of credit cards. I was raised in a very anti-credit card house, a very big pro Dave Ramsey kind of, financial education, and that was fine. And that worked out well for me because over the years, I always had a debit card, and I use a debit card for absolutely everything. But I also watched my financials in my account constantly. I was always looking to see how much money I had, right? Because I never knew if I was going to run out of cash. Now, if you use a credit card in this way and you are financially trained in the sense that you know how much money you have, you know how much budget you have, and you only spend what you actually have, credit cards are amazing. And the reason credit cards are amazing is because they help you build your credit. So one of the little tips and tricks here I try to explain to people with credit cards is that there's something called utilization rate as well. So how much of that credit balance are you using? The lower that utilization rate, so the less credit that you actually need, the higher score you will often get from companies like FICO, TransUnion, Equifax, Vantage Score, I think is one of the names of them officially. But anyways, so what you want to do in a nutshell is if you're financially responsible, you have the credit card, you want to apply for it, get it, and then you want to actually use it for a 6-month period, and then you want to request an increase, so a credit line increase. So if you start out with, let's say, a $2,000 limit on the card, they might raise it to $2,500, maybe $3,000, $4,000 or whatnot. And over time, if you increase the amount of credit available to you and you use the same tiny amount of credit, which I'll explain here in a second, then your credit score will actually go up. Now, this is very important because most of us do not have loads of cash sitting around to buy houses and cars. And if you need a house or a car, it's a far better deal to go out. I mean, mortgage rates are up through the roof now, but like 2.5% was like a 30-year mortgage rate a few years ago. I think now we're looking like at 7 to 8%. But if you're on the bad side of this, so someone that might have had originally, back in 2020 or something, 2019, had a mortgage rate that was like 2%. If you had bad credit, you might be paying 4 or 5%. So you might have almost double the interest rate or more just because you don't have credit. So it'll save you a lot of money in the sense that there are going to be things like houses and cars, and we need them up front, and we just don't have the cash. And I'm a big proponent for paying them off early, but you might need to actually get a house or a car earlier in your life, and you don't want to wait until the age of 45 or 50 by the time you have all the cash to pay that off. So it is important to build credit, and credit cards do this very, very well. Now, that being said, if you're going to do this responsibly, pay off the balance consistently. So I treat my credit card just like a debit card. Every week to 2 weeks, I log in on my app or I go on the website and check it out. And I look and I see how much I have sitting on there, and then I just quickly pay it off. I just pay it off over and over again, right? I just make sure that it's a debit card. Like, that's how I treat it. Now, the other advantage of credit cards is that you get rewards with it. So what you don't realize is when you go to the store and you buy, I don't have anything with me here. You buy a whiteboard marker, and let's say it's $1. There's actually markup in that price for credit card transactions because the store, whether it's Kroger, Walmart, Target, wherever you're at, they have to pay some of that credit card transaction. And people like me use their credit card for everything, so they have to bake that fee essentially into the price of all of the goods. So if you're using a credit card, for example, You might get 1%, 2%, 3%. I don't know. Whatever card you have, you will get some money back on that. So it actually saves you money in the long run as well. Now, the scary part of credit cards that we need to talk about is the fact that, one, in the United States, there's this bad trend of just everybody has to have everything that they've ever wanted. And so they run out there and they want to be awesome and Instagram famous and they want to have whatever their friends have. And so they go, well, I'm going to get paid in like a week or 2 weeks. And so I'm just going to take my card and swipe it and I'll pay it back. And then it comes to like my method a week or two later, you're supposed to pay that off. They look at their account and they go, well, I can't make my rent. So I'm not going to pay the credit card off. I'll wait and I'll put it out another week or two. And then what happens is then they have this balance on the card. So if you do pay off the balance consistently, like I pay it off a few times a month, you pay 0 interest. You pay nothing because you never actually borrow the money from them for a full month to accrue the interest on that. So you don't pay an interest. There's no other fees either. So you're building credit and you're paying no interest. Now with that situation piles where you're actually using the credit line, these credit card rates are super steep. I mean, they're like 25+% often. And that is a horrible, horrible rate. So you don't want to be doing that. You don't want to use a credit card for the actual credit. You don't want to have a balance on that card pending because it is a terrible, terrible situation to have. Now, I get it if you had a financial emergency, but you should watch my other video, which I'll link above and probably below in the description on how I manage my personal finances and how I avoid emergency payments and putting them on credit cards or anything else. But you don't want to end up in that situation where you are shackled down and chained into these credit card deals where you're just paying these payments. And unfortunately, a lot of these young people think like, oh, it's only a $35 a month minimum payment. I'll just keep paying $35 a month. I have all this extra cash. You are paying an exorbitant amount of money in that $35 that's actually not going towards the balance. It's just going towards the interest. So I am strongly against using credit cards for credit. I am all for using credit cards for saving money because you get cash back and benefits. And also the fact that you can use it as a debit card. You are essentially using the system and not paying any of the interest. It is great. It is an easy way to build credit without actually having a massive pile of debt. So in the credit side of this, when they do credit scoring and FICO, you want to have the utilization rate low. With all other assets for the most part, you're going to have these massive loans outstanding, like a mortgage on like 300,000 plus 400,000, 500,000, I don't know, 150,000, whatever your range is for your house pricing. And that's going to be on your credit record that you have this massive debt overhanging your head and you need to make a lot of money to pay that off. A credit card will allow you to have a nice buffer in the sense that you will have a chunk of that credit, but you're not using it. So your utilization rate will be lower because you have these sorts of credit cards, which result in higher, credit scores, which result in better interest rates for things like mortgages and auto loans, and you can save a bunch of money with that. All right, now all of that being said, there are other cheaper lines of credit as well. So say you use your great credit score, you buy your house. Often you can get a HELOC, which is a home equity line of credit. You can draw money off of your mortgage. So you've put all this money into the value of the house. You don't want to take a HELOC. You do not want to take a loan if you don't have to, right? You should save up cash and do it yourself. But that is a far cheaper route to use like a HELOC and get something like a 6-7% interest rate versus a credit card at like 25-30% rate for essentially the same sort of financial loan if you're in a bind here. So you don't want to use credit cards. They are the last resort. Now, I'll put another note on this as well because I am speaking purely from an American perspective here, and Americans love to get into debt. That being said, though, there are many, many, many countries around the world where this sort of financing system here is used to actually enslave people. So credit is absolutely terrible, and there's a lot of financial abuse in other countries around the world. And the fact is, we just kind of turn a blind eye and don't realize it's out there. So I'll link a video above or below again for this. There's a story here on YouTube talking about somewhere in India, I believe, where essentially you need a loan for something. Let's say your kid's in the hospital, you have to have the money. And so you take out this loan and now you basically work for this company or this family to make clay bricks here. Now you're making clay bricks and they don't really track the financials. They don't really tell you how much you're paying off or not paying off. And essentially they pay for, put in air quotes, they pay for your housing and your food and everything. And that gets tacked onto your bill. And essentially you can never, ever, ever pay the loan off. And so what ends up happening is now you are actually enslaved, essentially like in an enslavement camp here, tied to these masters or upper level people classes in India here because you took out a loan. So I get a lot of subscribers from India that actually message me and they're like terrified. Like, Dimitri, everyone's telling me to get a credit card. For example, the guy at the beginning of this video, I've had multiple other people. This is not an uncommon question that I get asked quite a bit. But it's like their families are telling them, do not get credit, do not go into debt. And I agree with that. But you can use a credit card smartly if you manage your financials correctly. So there are bad situations for credit cards. They're pretty horrible products in general, but if you can use them responsibly, they can be pretty great tools to build credit and get some money back and some rewards with it. So anyways, that's my 2 cents. Thanks for watching. Thanks for listening. And as always, until next time.